All right, welcome to a Saturday webinar by Community CPA. So today I'm filling in for our CEO, Ingersoll, as she's not feeling well today. So we're going to talk about the IRS webpage, ERC webpage update again. So this is actually a topic that was covered a few weeks ago by our CEO. And so, but there is some of our clients or audience still have more questions, so we decided to do it again with some additional clarifications. All right, so let me share the screen. So, by the way, sorry about being late today. We had a little technology issue earlier, so we actually are, and I'm not using our webinar room, so I'm just using my office today. Anyway, so let me share the screen. Okay, so as I just mentioned, so what we're going to talk about is the IRS ERC webpage update. Okay, so a quick few words about myself. I'm a doctorate. I have a doctorate degree in mathematics, and also I'm professor, university professor. I'm now working at Community CPA. So our firm's phone number 515-288-3188. Okay, a quick disclaimer. So if you are just coming here to listen to this webinar and then you want to do some things on your own, so we are not responsible for any damages caused by that, because just by attending this webinar, that does not create a client relationship with us. Okay, so if there are things that you're not sure, so you want us to help, then and everyone is welcome to contact us at the phone number or email address that's given in our webinars throughout. And so then we'll be very happy to serve you, professionally. All right, so as our CEO talked about on her August 11th webinar, so she mentioned that IRS updated their ERC web pages. Okay, so those web pages are not necessarily rules, because the rules will come out in a more formal manner, such as the IRS publications, so which we'll talk about later today. Okay, and so but anyway, so they updated their web page, and in fact, IRS even indicated when they did the updates. So the update dates were July 27 or 28 of this year, so about just over a month ago. So actually, when our CEO was talking about it, and that was only about a week or 10 days from the IRS updating date. So then after our CEO's talk, so some of our clients or audience, they have more questions, so they emailed us or called in for more, so for some additional questions. And so we decided to just do it again with some additional clarifications. All right, and foremost, let me stress that. So there are no new rules, okay? And IRS obviously does not have the power to make new laws, and so they can only make rules for implementing the laws that are passed by the Congress, or signed, actually passed by the Congress, signed into law by the President. Okay, so IRS does not have the power to make new laws, and IRS does have the power to make rules about rules or regulations about how to implement the laws. And so IRS updated its web page, ERC web page. That does not mean IRS made any new rules. Okay, so it might have some more clarifications on the web pages there. There definitely is no new rules. So we're going to go into the details to summarize the law, ERC related laws, and the rules that were made by IRS previously. So, and at the end of the day, you will see that there really is no new rules that's being made. Okay, so contrary to what you were hoping, maybe, or in some cases you were hoping in something, maybe not. Okay, so but anyway, so and so there is no new rules, and despite of the web page updates by the IRS. All right, so let's quickly summarize the laws related to ERC. And so the first law that regarding ERC is CARES Act. So that was a law that's passed in March of 2020 when the coronavirus pandemic just started in the U.S. Shortly after that started in the U.S. And so in CARES Act, the ERC was introduced. Okay, so the eligible quarters, the ERC eligible quarters were only the quarters in 2020. Okay, so the first quarter all the way through the fourth quarter. And so there were two eligible criteria. One is by revenue drop or gross receipts, or so the proper term is significant decline in gross receipts or in quarterly gross receipts compared to the gross receipts of the same quarter in 2019, the pre-pandemic, the so-called normal quarter, pre-pandemic quarter. So these were the quarters in 2019. Okay, so the two criteria: one is by revenue drop, and the threshold that was introduced in there was 50%, or in fact, the revenue drop has to be greater than 50%. Okay, and the other criteria was the government COVID order. So if there was a qualifying government COVID order, which can be the federal, state, or county or local, that's a city, or it doesn't matter how small a city it is. Okay, so it's a government order and COVID order, and that suspended your operation either fully or partially, so then you may be eligible for ERC during the period when the government order was in effect. Okay, and also it was not so clear whether it, of course, the CARES Act, one of the big things that was introduced was the PPP program. Okay, so the CARES Act itself did not make it clear whether the PPP and the ERC can be claimed by the same employer, under both programs. So, and obviously you cannot double dip, and that principle is always there. You cannot use the same wage for both programs. But if you have a way to split wages, okay, so then can you claim both under, make a claim under both programs, both the PPP and ERC? The CARES Act did not make it clear. So IRS clarified that you cannot. Okay, so basically IRS says if you claim the PPP, then you cannot claim ERC. Okay, so it's a one or the other. You had to pick. So because of simplicity and possibly the bigger amount as well, so all the employer, mainly because of simplicity, I guess, so everybody opted to choose the PPP. So and then so in 2020, even though the CARES Act did mention the possibility of making ERC claim, nobody cared about it because everybody was claiming PPP in 2020. Okay, and so this or here, by the way, this is not part. This was not made clear in the law. This is actually the IRS's initial guidance or IRS's initial interpretation of the law. Okay, so then in December of 2020, the Congress passed a new law, the Consolidated Appropriations Act in December 2020. So in that law, so the ERC program was expanded, okay, because the pandemic was ongoing, and in fact, in December 2020 and January 2021, that was a moment actually the pandemic became very bad the situation became very bad in the U.S. Okay, so anyway, so the Congress at that time passed a new law, so extended the ERC into the first 2 quarters of 2021, and also the new law clarified that an eligible employer can claim, basically apply for PPP and claim the employee retention credit, or ERC, at the same time. You just cannot double count the same wages. Okay, so if you can split some wages accounted for PPP and some other wages, you have leftover wages, and then you can use leftover wages to claim the ERC, as long as you are eligible. Okay, so ERC is not automatic, so you do have to meet the criteria. Okay. And so again, it's the same 2 criteria. So the revenue drop or government COVID orders. Okay. And so the revenue drop for 2020, during by the CARES Act, that's a 50%. That's the threshold. And then for the 2 quarters that was introduced, 2 quarters in 2021 that was introduced in the CAA, the threshold is 20%. Basically, as long as your revenue drop, quarterly revenue dropped by more than 20%, so then you are eligible for ERC in that quarter. Okay, and then of course the same government COVID order would apply in those 2 quarters as well. So as long as there's a qualifying government order that required your business to either fully or partially shut down. And also, as mentioned, so this CAA did clarify, and so you can claim both PPP and the ERC. So that's when this ERC became a important subject among the employers. Okay, with the pandemic still going on, so the more government subsidy or government help would be welcome. Right? All right, and so then later in March of 2021, so the Congress added 2 more quarters. And so in addition to first and second quarter in 21, so they added the 3rd quarter and the 4th quarter. And so those 2 quarters, you can still qualify under the same two criteria, so the revenue drop or government order. So the revenue drop is still the 20% threshold, and the government order. Okay, so then you can do that in 3rd quarter and the 4th quarter. So that was the law that's passed in March of 2021. Okay, and then so I guess that's the American Rescue Plan Act. Okay, so that's ARPA, American Rescue Plan Act, in March 2021. And so then in that law, a new criteria was introduced. Okay, for those small businesses that started in 2020 or 2021. Okay, I mean it's after February 15 of 2020. So okay, so basically in 2020 and 2021. And also has to be a small. Okay, recovery startup business by definition is small in the sense that the annualized income is or was less than or equal to $1 million. Okay, and then the Congress eventually in November 2021 passed another law, the Infrastructure Investment and Jobs Act. Okay, I call it IIJ, so that's the Infrastructure Act. And that's passed by the Senate in November of 2021. So I think the House passed that law earlier, probably in August of 2021. People already were worried about that law was coming. And so the Senate eventually in November of 2021 passed the same version. So then it was signed into law by the president shortly after that. So that law repealed 4th quarter ERC program. Okay, it's a bad news, but Congress made that decision, so we had to abide by the laws, and now IRS has to abide by the laws. And so, so finally, to sum up, Okay, so the ERC laws has remained the same as of November 15 of 2021. There was no new laws passed in 2022 or 2023. So the ERC laws stayed the same after the last law that was passed, the Infrastructure Investment and Jobs Act, that was passed in November 2021. So in terms of laws, and it's been the same. The ERC laws has stayed the same since November 15, 2021. Okay, so if someone is telling you there's been a new law in 2022 or 2023 that made you eligible, and so that cannot be true. Okay, so there's no new laws after November 15 of 2021. Okay, and then just quickly summarize what the laws, add the final version. And so first of all, for 2020, there are 4 eligible quarters, potentially eligible quarters. So you do have to check if you are eligible. So then there are 2 eligibility criteria for 2020. So either the revenue drop, quarterly revenue drop, that has to be greater than 50%. There are some details which I'll mention a little bit later on. So you need at least 1 quarter to have 50% drop, but if you have other quarters less than 50, potentially you may still be eligible. Okay, so and that's some of the details. But roughly speaking, you do have to have say a revenue drop 50% in 2020, and also the government COVID orders. The other criteria. And also, as I mentioned earlier, so the law does allow you to claim the ERC even if you had 1 round or 2 rounds of PPP. Okay, so then for 2021, so the first 3 quarters, and you can still qualify under either one of the 2 criteria, so the revenue drop. Okay, and except, that's similar to 2020, except that the threshold for the 2021 quarter is 20%. Okay, so your drop needs to be greater than 20%, not 50%. Okay, and also there is the government COVID order criteria as well. Okay, and also 2021 the same way. So if you claimed, if you had, let's say if you applied for, and if you're eligible and applied for a second round of PPP, and then you still are eligible for ERC in those quarters, provided that you meet either criteria 1 or criteria 2. Okay, and then for the 2020 3rd quarter and the 4th quarter, you could also qualify under, qualify if you are a recovery startup business. Okay, so which I talked about earlier. So these are the businesses that started after February 15, 2020, and the annual sales or annual revenue, and in fact, I should say annualized revenue, was less than $1 million. Okay, less than or equal to $1 million. Okay, so the 3rd quarter of 2021 can be claimed in 2 different ways. So, either qualifying under the criteria 1 or 2, or claimed as a recovery startup business. And that marked red for that purpose, for that reason. So, because that 3rd quarter, you can use the 3rd criteria there. Okay, which actually is significant, which I'll talk about in just a little bit. Okay, and then that's the summary, and let me just show this again. So that's a summary of the laws passed by the Congress related to ERC. So IRS, as the agency that implement the ERC law, so IRS has made several rules, so they can make the rules about how to implement the law. Okay, so IRS has published several notices. Okay, so and basically that's IRS's rules for implementing the law, and so there are a few important ones. Okay, so there are 3 important ones. I'm going to summarize them here. And so the first one is IRS Notice 2021-20, and that was published in March of 2021. Okay, so in that order, it clarified, there are some further clarifications about the government or what is meant by a partial shutdown by a government order. Okay, so you how to determine a government order that business a partial shutdown, and also clarify some details about how to coordinate between the PPP and the ERC programs so that you don't double dip between the two programs. Okay, and also clarify something about the health plan. So that if you have a qualified health plan for your employees, so then the employer's expenses paying for those health plans. In fact, both employer and employees payment toward those health plans, they can be counted as qualifying wages, and also it further clarified how to apply the so-called alternative quarter test. So basically, to determine eligibility of one quarter, and you can actually use the preceding quarter's sales to try to determine, let's say, a sales drop to determine eligibility. Right, so that's the first important IRS publication. So, and then there's another important one that is an IRS publication 2021-49. So it clarifies several questions that people raised after, because also in 2021, that's the ERC program became whether popular or people become more aware of the ERC program, because PPP by then it's already all gone, and so then people are looking for the additional government help. So then people start noticing the ERC or paying attention to the ERC program. So there were more questions that from people. So then IRS published this new notice, clarify some of the questions. Okay, so they clarify some FTE and questions related to FTE, how to count the FTE, especially for 2020. So because 2020 the FTE count should be less than 100. So otherwise there's some complicated rules about how to calculate the qualified wages. Okay. And also in that notice, so IRS has stressed the aggregation rule, or the so-called controlled group concept. So if you own, or if several individuals, they own several entities, so it's possible that several of those entities, they need to be aggregated together. So even though legally they are separate entities, for ERC purposes, those entities may need to be looked at together. So they are like a different branches for one entity or one group. They are different branches of one group, even though they are independent. They are different or independent entities. So and then you do have to aggregate those. If the aggregation rule applies, then you have to combine the revenues. If you're trying to apply the revenue drop criteria, or you need to combine them together if you want to try to apply the government order partial shutdown criteria as well. Okay, and in that notice, it also clarified the so-called constructive ownership. Okay, so basically, in the constructive ownership, roughly says that even though you do not actually own a company, just because you are, let's say, you are the brother, your younger brother owns a company 100%. And then you actually are considered 100% owner of that company as well for ERC purposes. Okay, so that's the so-called constructive ownership. Okay, and then based on this constructive ownership, And then you had to determine the related individuals. So basically, so there's a whole list of related individuals. So you basically do the relatives of the constructive owners. Okay, so related individuals are the relatives of the constructive owners. So there is a specific list of what those relatives need to be. Okay. And so it's not unlimited expansion of relatives. So there's a fixed set of the relatives. So, but anyway, so the wages of those relative, the wages of the related individuals need to be excluded in your ERC calculations. Okay, so that's a rule that's stressed by the IRS in this 2021-49 publication. Okay, so both the aggregation rule and this constructor ownership and the related individual concept that they were stressed. Okay, these were not new, by the way. Okay, so they were all clarified in the law. So the IRS is just simply making them more clear with those, in the rulemaking, and they were simply stressing the application of those rules as mandated by the law. Okay, so these are not IRS, the things that the IRS came up with. So IRS is simply implementing the law. And also, IRS clarified the income tax amendment requirements. Okay, so if you claimed 2020 ERC or 2021 ERC, then you are required to go back to those years to amend those 2 years income tax or business income tax returns. Okay, and then of course, if the business amendment of business return requires you to amend the personal return, so then you have to amend your personal return for those 2 years as well. If you claimed ERC for 2020 or 2021, you cannot just try to adjust the ERC credit in your 2022 or 2023 income tax return. You actually are required to go back to the 2020 or 2021 tax return to amend those 2 years income tax returns. Okay. All right. So those were clarified in the 2021-49 publication. Okay. So then, so earlier I mentioned that in November of 2021, the Congress repealed the fourth quarter 2021 ERC program. Okay, so the only employers that were still eligible for the fourth quarter 2021 ERC were those recovery startup businesses. Okay, so in general, so that the fourth quarter ERC, fourth quarter 2021 ERC was repealed. So IRS also made a publication, published a notice, 2021-65, to clarify some of the implementation rules related to that repeal of the fourth quarter 2021 ERC. Okay, and so IRS did stress because then the fourth quarter is left only for those recovery startup businesses. So IRS did stress again. So even in the determination of recovery startup business, the aggregation rule still applies. So if you own, let's say, if you are 100% owner of two businesses, one has been long-standing, let's say you have been running it for many years, the other one just started in 2021, and then even though they are two legal and two different legal entities, and if the ownership and you have common ownership, so then they need to consider the two as two branches of the same group. So in that example I just mentioned, so the new business that you started in 2021 likely is not a recovery startup business. So when you aggregate your two businesses together, okay, both the time when you start the business and the annualized $1 million sales, that they become an issue for you, okay? And also in that notice, it clarified, okay, so this is a rule that it's easily overlooked. And I believe even IRS, many of their processing agents, they probably don't understand this, even though this is IRS publication. This is an item that IRS has specifically clarified in this notice. Okay, so IRS actually brought to the attention that for third quarter 2021, okay, so if you claim the third quarter 2021 ERC as a recovery startup business, the law prohibits you from claiming any prior quarter's ERC based on either the revenue drop or the government order. Okay, so for instance, if in the second quarter 2021, if the government required your business to shut down even completely, to make it simple, and then as long as you're claiming third quarter as an RSB, recovery startup business, then you cannot claim the second quarter ERC, even though you may be eligible for ERC in that quarter. By say the government order or by the revenue drop rules. Okay, and but the fourth quarter 2021, there is no such restrictions. Okay, so if we use the same example, let's say in the second quarter 21, and your business was mandated by a government order to, let's say, to be shut down completely, and so you were let's say eligible to claim an ERC in the second quarter 21, and then you cannot claim third quarter, because if you claim third quarter, you cannot claim second quarter. But you can skip third quarter and then claim fourth quarter. You can claim second quarter and the fourth quarter. So the fourth quarter as an RSB, okay, because you're a recovery startup business, and second quarter you claim on by the government order rule. Okay, so then you can do the combine that way, but you cannot combine the third quarter with the second quarter. Okay, so if you claim third quarter, you cannot claim any prior quarters. Okay, all right. And also, because the repeal was almost like a retroactive repeal, the repeal of the fourth quarter, because employers were allowed to claim ERC ahead of time, like advanced claim. So that's even before you file the fourth quarter payroll report, you could already do an advanced claim of the fourth quarter ERC. So in that sense, the repeal was like a retroactive repeal. And then some people already, try to make use of the fourth quarter ERC. They were, they were expecting and that's coming, so they were already made use of that. So the IRS clarified in this publication how you do the repayment, and because then there is no more fourth quarter 2021 ERC, and also the IRS under applicable conditions would waive the penalty for late payment of the fourth quarter payroll taxes. All right, and so of course but anyway, okay. So there are some other things that's clarified in that notice as well. All right, so earlier I summarized the laws as of November 2021. Okay, there's been no change in ERC laws after November 2021. Okay, so the same thing can be said about the ERC rules. Okay, so IRS, at least to my knowledge, has not published any new rules after December 2021. So 2021-65 is almost surely the last ERC guidance or rule that's published by IRS. Okay, so and also those three are the most important ones. So if you're trying to refer to IRS guidance for to determine whether you're eligible and how to do the calculation on that. Okay, so those are the probably three most important IRS publications. There are some other publications related to ERC as well. Okay, and then in some cases you may need to refer to other ones, but these are the three most important ones. And also there has been no change after December 2021. Okay, so and after December 2021, so there's no new rules or no new laws, no new rules in 2022 or 2023, either the law or the rules. And so again, if anyone is telling you otherwise, then you should ask them what specific rule in 2022 that was new, or even in 2023, what's the specific law or rule that's new in 23. All right. So having done that summary, so I'm going to pretty much repeat our CEO's talk that she did in one of her prior webinars on Saturday. So basically to summarize or basically going through the updates on IRS website. Okay, so then we'll go through a couple of you will see that really there's nothing new in terms of as a rule or law. There's nothing new. They're just simply stressing or clarifying some of the things. Okay, so for instance, related to eligibility, question number one is is ERC is every business eligible for ERC? So the answer to that clearly is no, because in the law and the rules, IRS rules, it is everything it's made clear that you have to qualify under one of the criteria, one of the applicable criteria. Okay, so not everyone is eligible. And also, so basically, stress that. So there has to be either a government order, or you suffer significant decline in gross receipts, or you are a recovery startup business. So then you may claim ERC in the third and fourth quarter of 2021. So, and then obviously, the details of how, what is meant by the significant decline gross receipts, that there's specific definitions, and there are some detailed rules. And then for recovery startup business, and I also mentioned that need to be a small recovery, that really is a small business, okay, with annualized sales of less than $1 million. Okay, and so there are several other IRS updates on their webpage. And again, these are not change in the rules. They're simply just clarifying or stressing some of the issues that the people are asking or people are having questions about. Okay, and now IRS did list did list of some employers that are not employers or tax preparers that are not taxpayers, or employers that are not eligible for ERC. Okay, so those include the individual taxpayers who are not business owners. If you don't own a business, you're not running payroll, and then you are not eligible for ERC. And if you're an employee and not an employer, and you are not eligible, because the ERC is a program for employer, not an employee, even though the name or the title of the program is employee retention. It has employee in it, but it's not a program for employees. Okay, and then most importantly, IRS listed that so if you experienced a supply chain disruption, which most businesses did suffer that. But if you experience that supply chain disruption but did not experience a full or partial shutdown required by a qualifying government order, then you do not qualify for ERC. Okay, so this is a contrary to what some of the contrary to what you may be hearing from some of those ERC promoters. Okay, they tell you, well, you suffered the supply chain issue, so you qualify for ERC. Okay, so you don't automatically qualify for ERC just because you had supply chain issues, which almost all employers had to some extent, the supply chain issues in 2020 or 2021. So we all had some supply chain issues. That does not automatically qualify us for the ERC programs. So we have to identify a qualifying government order and then link your supply chain disruption to those specific government orders. So it's those government orders that either directly required you to shut down a part of your business, or required your suppliers to shut down their business, either fully or partially shut down their business. But anyway, you have to be able to trace your supply chain disruption to specific government orders. Right. If you cannot do that, and just because you suffered supply chain issues, you are not eligible. Okay? So that's probably one of the most important things that IRS was trying to stress in those webpage updates. Okay, and then it further clarified. And again, this is really nothing new here. What kind of government orders are the qualifying government orders? Okay, so we only have, let's say, 8 minutes left because we started kind of late today. So I'll kind of I'll just rush through some of those remaining slides. Okay. And also, IRS did clarify in this question on the qualifying order as well. So if there were recommendations, bulletins or statements by government authorities, and these are not, in general, these are not, or by themselves, they are not government orders. Okay, so this actually even includes CDC guidelines. So if the CDC, because CDC typically they publish their things as guidelines and not as order. So but if your state or local government requires you to follow the CDC guidelines, that do make CDC guideline an order in that sense. When you combine the local order and the CDC guidelines, but the CDC guidelines by themselves are not government orders. Okay, so that's one of the things that's clarified by IRS in their July 28, 23 updates on their web pages. But again, that's not new. Okay, so those you probably have been reading those on the internet by many other sources already. Okay, including by IRS, some of the other publications or their web page information. Okay, and also also another clarification is that so just because there was a government order that required to shut down part of your business, that do not necessarily make you eligible for ERC. So there's also another thing you had to test. Okay, so you're basically part of your business must be shut down by that government order. Okay, just because there was applicable government order does not necessarily mean you're eligible. You do have to test. Your business was partially suspended, and IRS did have some thresholds about testing the partial suspension. So you might have heard of this 10% rule. So that's where the 10% rule comes into play. So basically, 10% of your operation need to be suspended in order for you to be able to use the government order rule. Okay, and also, there are several other clarifications, but these actually, I do remember these actually were in the IRS's web pages even, okay? And they were in some of the IRS notices. I remember the 3 notices I mentioned earlier, 3 IRS notices. So they contain a lot of frequently asked questions, answers to frequently asked questions, and then there are many examples. Okay, so including probably all 3 of those, for instance. Okay, so if you voluntarily close your business just because you don't want yourself or your employees to catch COVID, you decide just to, shut the door for a year or 3 months or however long you did. So, but there was no government requiring to do that. You just did it just for your own and your employees' safety, and that do not make you eligible for ERC under the government order rule. Okay, so you may qualify under the sales drop rule in that situation. If you shut your door, you're not operating for 3 months. Of course, you may not have any quarterly revenue, so then you may qualify under the revenue drop, but you do not. That by itself does not qualify under the government order rule. Okay, and so this is the one thing that as I mentioned earlier. So if you experience a supply chain issue by itself, but that supply chain issue by itself does not qualify you for the ERC. Okay, so that's IRS has stressed that in several places on their web pages, and then in fact, IRS even have a IRS's attorney even published a long memo, explaining that. All right. So, and then the decline in gross receipts. So IRS, again, there's really nothing new here. Okay, so I do want to mention some of the details about the gross revenue decline rules. Okay, so I mentioned earlier, so in 2020, you need at least one quarter to have 50%, more than 50% drop, okay? But if you have one quarter that's more than 50% drop, that generally speaking would allow you to claim at least one more quarter of ERC in 2020, okay? So the same applies to the 2021 ERC, okay? So they are applied a little bit differently, so the two, slightly different concept, but there's similarities. So roughly speaking, if you have one quarter that meets the threshold, and then for ERC eligibility, so then you are automatically would be able to claim one more quarters of ERC. Right? Okay. In some cases, in the 2020 cases, you may be able to claim even two quarters of ERC just because you had one quarter with more than 50% drop. Okay, and so regarding recovery startup business, so there are a couple of detailed rules related to recovery startup business. Again, these are not new. Okay, so I just quickly mention those. So this was made clear in the law and in IRS's notices. Okay, so there's nothing new on the web pages here. And then, so your annualized for recovery startup business, the annualized gross receipts must be less than $1 million or $1 million or less. Okay, and then the maximum ERC amount is $50,000 per quarter. Okay, so even if you had, say $500,000 payroll in that quarter, so the maximum you can claim the ERC wise would be $50,000. You're claiming the ERC as a recovery startup business for either the third quarter or fourth quarter 2021. Okay, and so IRS also draw people's attention to a couple of details when you fill out the claim forms. And so the first one is about deadline. Okay, so the IRS has clarified that the deadline for the 2020 ERC doesn't matter which quarter in 2020. Okay, so as long as it's a quarter in 2020, you are claiming the ERC. The deadline for that claim is April 15 of 2024. So you still have time. And not too many months left, but you still have, let's say, good 6-7 months left for you to claim the 2020 ERC. And then for 2021 ERC, the deadline is going to be a year later, so that's April 15 of 2025. So for 2021 ERC, you have more than a year left to submit the claim. Okay, another detail about doing the claim form is that who can sign the ERC. We actually have seen some of our clients' ERC claim being rejected by IRS simply because they put in either the wrong title or had the wrong person signing. Okay, and then so then IRS have rejected some of those ERC claims. So if you're a sole proprietor business, then obviously it has to be the sole proprietor signing, and you can, let's say, you cannot have your, let's say, if you are a sole proprietor owner, so you cannot have your son sign it on your behalf. Okay, so or someone else sign it for you, so you have to be the one signing it. And if you're a corporation, and it has to be the president, vice president, and other principal officers duly authorized. Okay, so and it's not clear what the principal duly authorized means. So I just suggest you, if you are the major corporate officer, so just add yourself, have the corporation give you the title of president or vice president, just sign as either one of those titles. So then that will remove any ambiguity. Okay, and then if you are a partnership with 2 or 3 partners, 2 or more partners, I should say. Okay, so then make sure it's going to be a partner that's signing. Okay, and if you are a single member LLC, okay, so then you also have to be careful. Some almost same as a sole proprietor. Make sure it's that member signing the ERC claims. Okay, because every time your claim gets rejected, and then you submit a new one, that your claim may be put to the back of the line, back of the queue. So that could mean it's going to take you another, say, 4 to 6 months to get your ERC checks. All right, and a few other things. Let's see. I think one which may be okay. So let me just quickly mention that if you are, as an employer, let's say, okay, so you filed all the 941, and at year end you give the W-2 out to all of your employees, but somehow you forgot to submit the W-2s to Social Security Administration. Did not file this W-3, W-2. Did not do the W-3, W-2 filing with Social Security. So then your ERC claims may be rejected. Okay, so the rule actually says you will be rejected, but of course, if IRS didn't catch it, and so then because those W-3, W-2, they were submitted to Social Security. Okay, so by now, of course, we are talking about 2020 and 2021. So by now, IRS would already have matched their data, their 941 data with the Social Security Administration's W-3, W-2 information already. So IRS would have those information whether you did or did not file your W-3, W-2 with the SSA. So if you did not file your W-3, W-2 with SSA, so you are risking your ERC claim being rejected, even though you did file your 941, you did give your employee W-2s. You just forgot to file the W-3, W-2 with SSA, so then your ERC claim may be rejected. You do have to make that up by filing the W-3, W-2 with SSA first, and then claim the ERC. Okay? And also, so a lot of people have been hoping. So in fact, for a period of time, there were even rumors. Okay, that Congress is passing a new law that will allow the employers who claim the ERC to adjust the ERC in their current year or future years income tax returns. Okay, without having to go back to amend your 2020 or 2021 tax return. And so IRS made it clear there's no such law or rule. Okay, so you still need to go back to 2020 and 2021 to amend your business income tax returns. If you claim the ERC for 2020 or 2021. Okay, so there is no way around that. Okay, so if you claimed 2020 or 2021 ERC, you need to go back to 2020 or 2021 to amend those 2 years income tax returns. All right, so IRS, have been warning taxpayers about the ERC scams, and so you should exercise your due diligence. Try to determine on your own whether you're eligible or not. Just don't be fooled by whoever that's telling you that you are eligible, and that to make sure that you determine on your own whether you're eligible, because you will be taking that position by signing the ERC claims. Okay, so doesn't matter who is helping you. You as a taxpayer is always ultimately responsible for the tax positions that's taken on tax returns. Okay, so ERC claim is a type of tax return. You're just amending the 941 employment tax returns, so you are taking a tax position. So taxpayer always is ultimately responsible for the tax positions that you're taking. Okay, and so do your own diligence, and then make sure you qualify for ERC before you sign the ERC claims. All right, that should be all I want to talk about today. So then if you have any further questions, feel free to send us an email at our general email address, Catherine@communitycpa.com, or call us at 515-288-3188. We're open Monday through Saturday from 8:30 to 5:30 p.m., 8:30 a.m. to 5:30 p.m. Central Time. Okay, so we have 3 offices, 2 in Iowa and 1 in Minneapolis, but they are all in Central Time Zone. Okay, and also you can go to our webpage, www.communitycpa.com, and that you can find information about our firm, and also you can find the Zoom link, the links to our webinars, the past and the future webinars. You can find that there as well. All right, thank you for listening and watching. So we'll see you next time.